Alright everyone, Cowboy Trades here, welcome back to the channel. Well, what do we have here? As you can see on the hour of the FOMC minutes, the markets did not like the news that came out and we've started to plummet to the downside, just like we talked about in our previous video, FOMC minutes today, what you need to know. We're going to talk about what's happening in the charts, what's happening in the SP500 and Bitcoin in just 1 second, but quickly let me disclose the main pieces of information from the FOMC minutes. I've gone through and read this entire source, multiple pages, many pages, and I've summarized all of this for you. Of course, if you do want to read the whole thing yourself, I will leave the source to this down below. And once again, like I said, I can't always be here the second that the FOMC minutes come out. This is why I always recommend that you come over to my Twitter, because I do post this information as soon as possible. Let's dive into this. So what happened in the FOMC minutes today? These are the key bits of information that was in that document. Several participants emphasized the importance of communicating that a slowdown in rate increases is not an indication of a weakening commitment to achieve price stability, or that inflation is already on a persistent downwards path. Further rate hikes are necessary. Rate cuts probably won't happen in 2023. That is the most brutal statement that's happened in this entire thing. So I just want you to take that away. Rate cuts probably won't happen in 2023. I don't know if I believe that, but the markets seem to believe that as they're breaking down. They also said participants welcome October and November inflation drops, but agreed that it would take substantially more evidence of progress to be confident of a sustained downwards path. And then I've basically summarized the main pieces of information down here. I've basically said, the Fed really made no comments on how much officials intend to raise the interest rates in the next FOMC meeting in February and also in future FOMC meetings. And basically, all in all, no key information was given. They just reaffirmed what we already know, that further rate hikes are necessary. And they also talked about, that rate cuts won't happen in 2023. So this was extremely hawkish, just like we predicted in our previous video. The markets did not like this. Let's go check out how the markets reacted to this. I'll check out Bitcoin first, because I know that everyone on my channel prefers Bitcoin and cryptocurrency content over what happens in the S&P 500. Nonetheless, I will talk about the S&P 500 in just 1 second. So starting off with Bitcoin on the 5-minute time frame, this is probably something you've not seen me pull up in months and months, but sometimes there is a time to pull up the 5-minute time frame, and that's to see how economic data and news events shake the markets and see how they react to it. So we'll move on to the 1-hour time frame in a second, but you can see exactly when this hit at 7 o'clock on the dot GMT time, like we talked about, we absolutely started nuking to the downside. Within 5 minutes, we dropped half a percentage point. Within 20 minutes, half an hour or so, we dropped 1.15%. And in the past 5, 10, 15, 20 minutes, obviously as of the time of recording this, we broke down and made a new low. And at this moment in time, Bitcoin has broken down 1.22%, and as of the time of recording, it's sitting just underneath a 1% drop, of course, all in 2 hours. Let's pull up the EMA ribbons on the 5-minute time frame and see what is going on. Get rid of all of the noise. Don't need this, don't need this, don't need this, don't need this. Make these bigger. Bada bing, bada boom. And as you can see, since this news came out, the 5-minute EMA ribbons have started to cross bearish. We broke beneath them. We made a bear flag, as you can see right here. Let's bring up the price target of this and see what this is going to be. I really don't particularly like doing too much analysis on the 5-minute time frame, so I am just going to zoom through this. But you can see this would be predicting Bitcoin to move down to about 16,600, which is round about the midway point of this bearish pennant, which we will also talk about in just 1 second. Let's get rid of this, get rid of this, get rid of this, get rid of this. Let's see how the 15-minute time frame is doing. 15-minute time frame, the EMA ribbons are tightening. Now, if you're a veteran of the channel, you'll know why this is important. We always talk about what happens when the EMA ribbons become extremely tight. And when are EMA ribbons at their tightest? Well, of course, they're at their tightest not when they're very close to each other, but when they cross, because there's no space between them whatsoever. So when you see EMA ribbons go from really big like this to coming into a small range like this, and then especially when you see them cross, a big move always happens. Let me show you an example over here. EMA ribbons crossed, huge move to the downside. Here, EMA ribbons crossed, huge move to the upside. Here, the EMA ribbons were extremely wide. So what happened? A whole lot of nothing. We lollygagged slowly until EMA ribbons became their tightest. What happened when they became extremely tight? We had a huge move to the upside. I say huge move, we're on the 15-minute time frame, but this obviously wasn't a really big move. This was a failed move, which we will talk about in a second, but right now, EMA ribbons on the 15-minute are getting extremely tight, and they're looking like they want to cross bearish. On the 30-minute time frame, we've just fallen beneath support, and as we're coming over to the 1-hour time frame, let's look at the EMA ribbons on here because I don't want to focus on them too much. You can see we're falling beneath the short-term moving average and we're heading down to the long-term moving average at 16,750. So even in a best case scenario, it looks like we've got a little bit lower to go to the downside. On the 1-hour time frame as well, you can still see this very nice BART pattern playing out at this moment in time. So don't be surprised if we have, maybe a little pump up to the short-term moving average again before breaking down to that price target that we talked about in our previous video, all the way down here at 16,600 to fulfill that BART pattern, which is right next to the bear flag breakdown that we also just talked about. So let's come over to the higher time frames. Let's look at, do we want to look at the 4-hour? Let's look at the 4-hour time frame because you can see the failed move a lot better. So previously we've been looking at this chart with this bearish pennant, and you can see we had one failed move down here. As you know, if you do watch the channel, what does a failed move equals? It equals a fast move in the opposite direction. We went to break beneath this trend line and boom, we just started rushing up to the upside. And as of the time, the trend line was more like this when you were connecting to, this data point, and also these candle body closes. We broke beneath this trend line. We also, held it as support later on in the day, but you can see this was a failed move equals a fast move in the opposite direction. What happened after then? We poked our head above the trend line right here. Failed move equals a fast move in the opposite direction. Failed move equals a fast move in the opposite direction. Over here, we flipped it, held it successfully, and we had a huge move to the upside. But what was this? We didn't really hit any price targets. We just took a big run to the upside. And then literally instantly after that, we came back down in the macro time frame to retest this. We didn't hold it. So what is this? This is a failed move equals a fast move in the opposite direction. What has just happened? Well, let's give one more. On the 30th of December, we broke beneath the floorboards. We broke back up immediately, back tested, and since then we've been having a relatively fast move back up. And as of the time of recording, ladies and gentlemen, in the past 4 to 8 hours or so, well, yeah, in the past 4 hours, new 4-hourly candle just opened. Really, yeah, 4 hours or so, we poked our head above this trend line. We came back to retest it. And what did we do? Did we hold it as support and break up successfully? No, we've just had another failed move. What comes next? We haven't had a fast move in the opposite direction yet, but we're seeing a lot of technicals like this BART pattern, which are telling us that we should be coming all the way back down to the floorboard. So like I said, just a quick update on Bitcoin. I have presented you a few Bitcoin updates in the immediate short term. Also, yesterday we talked about the Bitcoin break within 24 hours. We've still got 4 hours or so to have a relatively large move back down to the downside. And even if we don't break out within 24 hours like originally planned, even if it takes another day or two, I still do think that Bitcoin is going to break through the floorboards of this bearish pennant. And of course, if you have been watching the channel, you know that I am currently in a trade. Where is it? Bitcoin trade now. We talked about this 5 days ago. Really, my thoughts haven't changed on this trade whatsoever. I'm still sitting very confident. In fact, I'm more confident in my trade now that Bitcoin's pushed up and had a failed move than I was when I entered this trade down here at 16,500. So still on the trade, still very confident that we are going to continue breaking to the downside all the way down to my take profit at 15,200. Just a quick on-chain metrics update. Let's refresh this because every time I refresh this, it seems that the 24-hour change is heading up. Before I clicked record and before this economic data came out for the FOMC meeting, the Bitcoin balances on exchanges in the past 24 hours weren't doing too much. But then when this information came out, there was a pretty big increase in the balances on exchanges in the past 24 hours. So we've talked about this on the channel. What does this mean? Well, what do you think people are doing when they deposit their Bitcoin on exchanges? If you're like myself and for security reasons, you've got your cryptocurrencies on, Ledger wallets, Trezor wallets, whatever you have your Bitcoin on, that's obviously a hardware wallet. Why would you go and deposit your Bitcoin on exchanges? Are exchanges safer? No. So you're either trading with that Bitcoin or you're liquidating it. And I believe that we're seeing the latter. I believe people are sending their Bitcoin to exchanges to begin to liquidate. And obviously the price has started to move down from then. So that would obviously reinforce my thesis. We've talked about this many times on the channel. You can see quite recently with this green line here, this green line graph, you can see spike imbalances on exchanges. Then we had a spike, which was a lower high. Then we had another macro spike, which was a lower high. And with this, you can see with this spike, we broke down into new lows. What happened next? We had another massive spike to the upside. We broke down into new lows. We had a relatively big spike here, but this was kind of just contending with the previous spike. After this spike and after balances on exchanges were elevated for quite some time, we did break back down to the downside as the balances on exchanges went back down. And then we saw another undeniable, huge macro run up in terms of the balances on exchanges. What did this mark? This marked the tipping point when Bitcoin once again broke down into new lows round about, what was it, 15,500 approximately. Doesn't matter about the approximate value. We're just looking in the higher time frames and talking about how the balances on exchanges affect the charts. Now, really, obviously, if I'm being honest, a 4,200% increase, or sorry, not a 4,200% increase, that would be detrimental. 4,200 Bitcoin being deposited in the past 24 hours is not the end of the world. I've made videos talking about 50,000, 55,000 deposits. Just wanted to give you a quick update that this metric is once again heading up, which is a sign that when this starts topping out, that the price action should be rolling back down into new lows. Now, let's talk about what's happening in the stock market since this news came out. Obviously, recently we've been looking at liquidity. I don't want to update this too much, but liquidity conditions are still relatively topped out. In the higher time frames, we just had a massive spike in the order books. And if we're coming over to what's happened in the past month to date, bada bing, bada boom, you can see this spike over here, and mid-price is kind of just lollygagging around these areas. So, the liquidity really hasn't vanished from the markets at this moment in time for the S&P 500. So there's still a very decent chance that the S&P has a monumental move back down to the downside. Now, let's come over to the S&P and also look at what's happening on the 5-minute time frame. You can see, where did this news came out? Right on 7 o'clock GMT time, and you can see, boom, as soon as that happened, within 5 minutes, we nuked down almost a whole percentage point. We then continued in the next half an hour to break down about 1.16%, and you can see we've basically just established this low here. And you can see at this moment in time, we're kind of chopping around. We're having a little bit of a bounce back up. But in general, it looks like we're making, a lower low, lower high type formation playing out on the S&P 500 right now. Let's slap the EMA ribbons on and see what is going on. Boom, 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 boom. Bada bing, bada boom. Don't need any of those other ones. You can see S&P 500 is pumping right now. EMA ribbons are relatively wide, which should indicate, a slight bit of chop before breaking back down to the downside. And also for the S&P on the 5-minute time frame, we've of course flipped bearish, and we've got a series of, highs that were established down here a couple of hours before the news came out. And then you can see over here, a lower high rather that was established when the news came out. Then we broke down, had a bounce, established another lower high when the news came out. Then we established the lows, which was a lower low, came up, lower high, broke down, double bottom so far, and then made another lower low. So of course, as of the time of recording, it's kind of degenerative to look at the 5-minute time frame. It's not really my style. This is not something you see me do often, but when economic data comes out, it is interesting to see exactly in the lower time frames how markets react to this news. So we obviously know this news is detrimental. We know that the Fed, obviously, like I summarized at the start of the video, came out with hawkish comments, once again talking about things like further rate hikes are necessary, which we obviously know. I believe we're done with the 75 basis points. I believe we're going to see a few more 50 basis point increases, which will further tighten financial conditions and further diminish liquidity conditions in the overall markets, which will of course pull the S&P 500 down. On the 1 hour time frame, you can see we are heading back down to the EMA ribbons. On the 15-minute time frame for the S&P, we're sitting right on the short-term moving average. Half an hour time frame, coming back down to these moving averages once again. So I do personally believe that the S&P 500 is going to start breaking back down to the downside, just like I've been talking about in my last couple of videos. I do apologize. I have drawn this slightly differently, this diamond bottom formation. I was just recording a video before this and I don't know what happened, but apparently I reset this chart. So I had to redraw this if you're wondering why it looks a little bit different or why it's in a different color. I don't know why it's in blue. I just decided why not. But nonetheless, looking at the 4-hour time frame, EMA ribbons are still extremely red and in bearish territory for the E-mini futures. And of course, right now, we're kind of lollygagging coming down to the short-term moving average while, sorry, we're sitting on the long-term moving average. The long-term moving average is this slightly darker line, which is, you know, a little bit more transparent. And then you can see, because we're above the short-term moving average, the short-term moving average is going to move up relatively quickly. What happens when the EMA ribbons tighten? You can see slight tightening of the EMA ribbons over here. Huge move ensued. You can see this was when the EMA ribbons are wide. We obviously just bounced in support on this. It's not 100% scientific, but of course, you know, a lot of the time you do see EMA ribbons are at their tightest here, and you have big moves to the downside. Sometimes they can happen to the upside. It happens either ways, but when you're in a bearish trend, especially for the EMA ribbons, when these get tight, it is a sign that we should be breaking back down. So with this as well, you can see since we've started establishing this range, and there is also an argument to be made if you get rid of this, that this could just be something like a triangle pattern, and you could draw the baseline out something like this, like maybe a bear flag. I believe you could draw a somewhat asymmetrical triangle, something like this, which is a continuation pattern which should be suggesting that we would be breaking to the downside. I personally think, just based on my experience in the markets, these diamond formations are beautiful, and they're very well respected a lot of the time, a lot more than bear flags and bullish pennants and whatnot. So I will be keeping my eyes on this. This is really how I'm drawing it and how I perceive what's going on right now. But you can see, if we were kind of drawing this as, you know, that triangle that we just drew out, you can see since this range has been established, we had highs up here, we pumped up. We had lower highs, we had a macro pump up here, we had lower highs, we broke down, we had a macro pump back up to the trend line, and once again, we've made lower highs. Now, on the base of this, there is an argument to be made that, hey, you're making, you know, higher lows as well, but on that same accord, I do believe this is going to be a continuation pattern, which will send us further back down to the downside, in my humble opinion, of course. And, you know, if we are looking at this, you can see this was a failed move equals a fast move in the opposite direction, and we absolutely nuked through the floorboards. You can see over here, we just poked our head above this trend line again, and if we come over to the 1 hour time frame and see right here exactly where the news was established, sorry, I should have kept this trend line here. You can see exactly when the news came into fruition, came into the hands of the markets, and people could read, you know, this commentary over here, which once again, I will leave a link to down below. I basically went through these 12 pages, so you don't have to, but if you want to go read it, be my guest, I will leave the link down below. You can see what happened when this information came out, and based on previous times where we've come up to this trend line, you know, whether you wanted to draw it like this in the past, came up to the trend line, and you come all the way back down to this trend line at the floorboards. You can see over here, we came up to the trend line, went all the way back down to the floorboards. A lot of the time we have like a bump out of the first trend line in diamond patterns, and we just form a new trend line with lower lows and lower highs, but with a slightly less steep line of attack, something that we've talked about many times on the channel. But nonetheless, this is pretty much all the time I want to take from you today. This is really what I see happening. I do see this being another failed move, especially a failed move equals a fast move in the opposite direction for Bitcoin. I expect, of course, very soon for the S&P to head back down to this kind of area around about 3,825, bounce up and take out the floorboards. And I do believe this diamond bottom, which is just the name of the pattern, regardless, this is a diamond formation. I do believe this diamond formation, or whether you want to look at it as that triangle pattern that we just talked about a second ago, the asymmetrical triangle, I do believe this is going to be a continuation pattern that will send us lower to the downside. All I've got for you for this video, as always, if you do enjoy the content, let me know down below by leaving a like and a comment down below. Share the videos with your friends if you want more content for me, and if you want economic data, memes, charts, other information, all of that good stuff while I am away from the markets, of course. When, you know, things like the FOMC minutes come out, I have to read all the information, I have to digest the information, I have to break down the important bits. I post it over on my Twitter first, and then I come over on YouTube a little bit later on, and I let you know everything that's happening in the charts and everything that's happening in the market. So as always, I do recommend you come over and follow my Twitter at 618_cowboy if you do want more timely information, more charts, more memes, more economic data, all that good stuff. But anyway, it's been your boy Cowboy Trades. I'm out. Peace.